Welcome to the Wilber and Longenbaugh podcast, where we break down tax, accounting, and financial strategies to help businesses stay compliant, profitable, and prepared. Imagine waking up to find your payroll stalled because of, like, a hidden supply chain bottleneck that actually formed 3 weeks ago.
Oh, yeah, that is a total nightmare scenario.
Right. But your systems just completely failed to connect the dots. So today, we're doing a deep dive into the 2026 financial tech stack for SMEs. We're moving way past basic cloud adoption to see how integrated tools are actively driving real-time decisions.
Yeah, because managing money at the SME level, it really requires enterprise-grade architecture now. I mean, we aren't just talking about basic digital ledgers anymore.
Yeah, for not.
To stay compliant and profitable, you have to integrate things like behavioral AI forecasting, automated workflows, and embedded banking technology just to survive in this highly reactive market.
Okay, so you mentioned behavioral AI, and I have to challenge the feasibility of that for a mid-sized company. I mean, in my experience, trying to connect a legacy bank feed to a cloud predictive model is just an absolute nightmare.
It really used to be, yeah.
Like, you get broken APIs, mismatched data everywhere.
Yeah.
How does an SME actually deploy this without, an army of IT consultants?
Well, that was certainly true a few years ago, but the big shift we're seeing in 2026 is native integration. Platforms now feature embedded banking.
Meaning it's built right in.
Right. The bank feed isn't a clunky third-party plugin anymore. It's native to the ledger itself. And that seamless connection allows the AI to move from simple rule-based sorting to true behavioral analysis.
So it's not just reading the dollar amount.
Exactly. It looks at vendor habits. So if a supplier who usually invoices on the 15th for $2,000 suddenly submits a $2,500 invoice on the 4th, the system just halts the payment and flags it.
Oh, wow. So it isn't replacing the finance team at all. It's acting as like a highly perceptive filter.
Yes, that's the perfect way to put it. Instead of an accountant manually verifying 500 routine invoices, they only review the 3 anomalies the system caught.
Which frees them up for actual strategy.
Precisely. And that automating of routine workflows directly impacts your cash flow management, which is the lifeblood of the business. A highly profitable business can still collapse if liquidity dries up.
Right, because the timing of the cash matters just as much as the amount.
Yeah, exactly. Modern forecasting tools look at the velocity of incoming receivables versus the cadence of outgoing obligations, like catching a looming quarterly tax payment before it collides with a bulk inventory purchase.
It makes me think of an advanced weather radar, because traditional bookkeeping is essentially driving while only looking in the rearview mirror.
That's a great analogy.
Right, it just tells you it rained yesterday. But these predictive models are spotting a hurricane forming miles off the coast, giving you 2 weeks to board up the windows, or, secure a bridge loan in this case.
Exactly. But to make that radar accurate, you need absolute control over outgoings.
So how are modern expense platforms feeding into this predictive model? Because employee expenses can be so unpredictable.
Well, by eliminating the lag of manual reconciliation. I mean, employees aren't handing in paper receipts at month end anymore.
Oh, thank goodness for that.
Right. Instead, they're issued virtual single-use cards with hard-coded parameters. If an employee tries to buy a software subscription on a card authorized only for travel, the transaction just declines at the point of sale.
That is huge for preventing fraud and unauthorized spending.
It really is. The expense data hits the ledger instantly, giving you a real-time, unalterable burn rate. And honestly, that makes year-end audits virtually painless.
I love the sound of a painless audit, but putting that much money-moving power into a real-time, instantaneous cloud environment, that creates a terrifying vulnerability, doesn't it?
It definitely introduces new risks, yes.
Because if your operations run seamlessly in real time, a hacker who breaches the system can drain accounts just as fast.
That is why cybersecurity is now fundamentally a financial risk issue. It's not just an IT problem anymore. SMEs are massive targets because attackers assume they lack enterprise-level defenses.
Which highlights why the old model of using a dozen fragmented apps was so dangerous.
Oh, absolutely. Having 10 disconnected software tools meant 10 different doors a cybercriminal could kick in.
Right. So when you operate with embedded banking, where cross-border settlements and daily workflows are fused together, you really cannot rely on simple passwords.
Not at all. Consolidating into one cohesive financial engine isn't just about efficiency, it's about drastically reducing your attack surface. The bare minimum now involves biometric multi-factor authentication and decentralized encrypted cloud storage.
Consolidation really is everything. So to distill our takeaways from this deep dive into the sources, what are the top things our listeners need to remember?
Well, first, real-time data visibility is just a strict baseline in 2026. You have to have it. Second, behavioral AI and native automation should be your standard for operational efficiency.
Okay, visibility and automation. And the third,
Finally, robust security protocols within an integrated system are just non-negotiable for scaling safely. You have to choose tools that scale with your growth and improve compliance.
I think that makes perfect sense. Aligning your technology with your business goals is truly how you survive and grow. For those looking to set up these kinds of secure, predictive financial systems, you can visit www.mwwatcpa.com to learn more.
It's definitely worth checking out to see how your current stack measures up.
Absolutely. We'll leave you with this provocative thought to consider. If your current financial stack suddenly predicted a catastrophic cash shortage for next Tuesday, how quickly could you access the verified data needed to pivot today?